And we have some breaking news from GM. Our man Phil LeBeau is going to try and fix it for us on the Squawk Newsline for details. What do you got, Phil?
Hey, Joe, we have General Motors taking charges totaling $1.6 billion for the third quarter related to reduction in what they expect to be EV capacity, as well as unwinding some EV product-related contracts. So as a result, they're going to take $1.2 billion in one charge as an adjustment to EV capacity, another $400 million in contract cancellations. So as you take a look at these charges, that's 1.2 plus 400 million, 1.6 billion. These charges and other non-cash impairments and other charges, that's adjusted for the third quarter as the company dials back what it expects to do when it comes to EVs. And they also say in this announcement that they will expect future charges in future quarters as they continue to adjust to the fact that the EV market is just not what it once was expected to be. And as a result, they're going to be dialing back their capacity.
So remember we just had Farley on, was that last week, Jim? And we actually asked him about this because the word was already out about GM that they had quietly pulled back. And I don't remember exactly, you probably do. By 2030, they were going to be at some crazy number, they said. And then they totally abandoned that number and came up with...
They've abandoned that for some time. They've abandoned that for some time. And Mary Barr, when you talk with her, will tell you that she will be cautious now to put out a specific percentage of vehicles that they expect to be electric by 2030, where at one time, Joe, and I don't know the specific... I think
it was like
percentage,
50 or something.
It was expected to be, something like half of their vehicle sales.
Yeah, like 50.
And then growing to 100% by 2038, 2040, sometime in that was the original plan. But yes, she would, if you were to pin her down right now and say, what do you expect by 2030? She'll clearly say that the market is not going to be what they once thought it was going to be. But I also think that she will not give a percentage. At least to my knowledge, she hasn't done one recently.
Because Farley said, when we asked him, he said, yeah, I would have never done that. Basically, he said, I'd never try to give a...
I think that's the whole industry, Joe. I think you have a lot of automakers who they got out there saying back in 2020, 2021, we're making these investments. We want to be all electric by 2035. We expect that our portfolio can be 100% electric by 2040. You don't see that anymore. There's nobody.
It wasn't in a vacuum, though, Phil. There's a Biden administration, and there are a lot of ESG groups and all kinds of stuff. Pressure.
You are correct. They felt the pressure to make those investments. They felt that this was the pivot that was going to take place long term, which is why they made the investments that they've made. But now they've got to unwind those. And unwinding them is going to be costly. That's what you see with these charges from General Motors. And listen, Joe, we're going to see this from other automakers as well.
That's what I was going to ask. Is this not, this is just the beginning?
You will see this from other automakers as well, that they are figuring out, okay, what's going to be the right mix here? How much of this that we earmarked at a particular plant for EV production can we adjust and go to hybrid production?
Hybrid.
Complete internal combustion engine vehicle production.
Right. They definitely are hybrids are along the way to where people want to get, obviously. But they're also, we're going to ramp up F-150s with V8s, and we're going to have a six backseat SUV for, they're not pulling back on ICE or gas guzzlers that much. I guess they're trying. They are
not pulling back on ICE and gas guzzlers. What they are doing, Joe, is they are saying those models that we have right now, how can we expand production, and where can we expand production? And increasingly, to this news from General Motors, they're looking at the plants where they said, well, we were going to make X number of electric vehicles here. Let's retool it and go back to ICE engine vehicles.
But speaking of administrations having an impact and an influence, are they talking about doing that in the United States now to comply with the Trump administration for more things made in America?
You mean, Becky,
for where you ramp up stuff? Yeah.
Oh, absolutely. 100%. And look, the CAFE standards have gone away. And the automakers wanted the CAFE standards to go away. And who wouldn't? That's a cost. That's a
Right.
cost that they've borne for a number of years. Now that they have gone away, the automakers are saying, okay, we don't have to worry about what our fleet mix is going to be. Where is the market right now? Where is the consumer? Is the consumer saying, I want just an internal combustion engine vehicle? Is the consumer saying, I want a
problem
gas
becomes
electric hybrid?
if you are constantly investing billions of dollars in initiatives that one administration is pushing and then the next administration pushes you the opposite direction. I mean, that's a problematic thing for automakers and for other companies, too. How big of a cost is this to bear?
Which is why the multiple is what the multiple is.
Right.
The constant invest, de-invest. Swing one way, swing the other way. What are the CAFE standards? They've been reversed. There has been no consistency for the automakers, at least for 25 years. Minimum. And as a result, if you were an investor, you were investing only for the dividend. There's nobody, aside from those who were investing in Tesla, there's nobody who was saying, I'm going to invest in General Motors because I expect that stock to double in 5 years. There's no guarantee of that because of the constant investments that they're making, multi-billion-dollar investments. And now we see they've got to unwind these that were made back in 2020 and 2021.
It's administrations change, but what doesn't change is the marketplace as quickly, and they have miscalculated on that more, I think, more than anything. So, right? I mean, except maybe where you build them, administrations can matter, but an administration cannot make people move to
except for the Biden
EVs.
administration put all of those
Joe,
EV credits on.
An administration cannot do that, Joe, but an administration that
can do credits,
offer $7,500 tax incentives for consumers. I mean, that's why the automakers made the investments they made. They felt that at a minimum it was going to be there through the first Biden administration.
But this is what happened. Even with all that, this is what happens. You know, those are pretty big charges. I guess they're non-cash, but they still ugly.
And there will be more. I think the news here, Joe, they have said explicitly in this release, there will be more charges in future quarters.
There will be blood. Okay.